Alright, what's going on, family? This is going to be a very quick video going over my two plays today and how I actually read premium. I read a premium spike that actually allowed me to stay in the trade. And this is a very important lesson that you guys need to start paying attention to. You guys need to start reading premium more because it'll lead to trades like this. So basically, Google, early on in the day, it started flagging right under view app, right under 1 minute cloud top. Was holding 1 minute cloud, decided to go long, trying to get a 1 hour close above this level, and then we should rip huge. My risk was the 1 minute cloud if we started breaking down, and so that's what happened. We didn't break the level, so we rejected, got back down to the 1 minute cloud, started breaking it down, and eventually I stopped out for a loss. And for those of you in my group, uh, there's a video that I made called How I Use Feelers and When I Size Up. And it'll explain how I switch directions on stocks like this and how fast I'm able to just change my mind and my plan when a stock goes against me, basically, and when it looks good in the opposite direction. So that's what happened to Google. It started breaking down. We're going to get two 1 hour closes under this level. If we go to the 1 hour chart, we got one above pre-market. That's what made me, try to get another 1 hour close above this and then rip us really big. But we ended up getting two. We ended up getting one lower, and then the second one was going to form. I knew that was going to happen since we were already breaking down, and it was around 15 minutes before the candle closes. So at this point, I'm thinking to myself, okay, that initial push was a fake out, and now we're getting a close under, and we're probably going to get a second close under. So I'm going to look to get into some puts. Since we're getting two closes under, that should be a confirmed breakdown, and we should move lower. So around here, 942, we made a little base, pushed up a little bit. I actually got into the weekly 2490 puts. This chart is kind of messy, but I was taking this on my small account, so that's why I didn't do the 2500s. I was doing this on the small account as well, and this isn't going to be too clean. Don't worry, we're not going to be looking at this. But basically, I got into these around, where is that, I got in at 2.6 ish right here. And if we go back, let's go to the 2500s. All right, let's take a look at these. It's a bit more clean. Basically, where is that? 940. So right around here. I would have gotten in, around this price right here on that push, probably around 3.4-ish. Okay, so that's not that 1 minute candle right there. On this push, I got into puts around 3.4. Then we pushed down a little bit, and premium spiked in response. It went to 3.7, which makes sense. From 3.4, it spiked a little bit on the little drop. But then, if you look right here, we actually started to push above my entry level, and we pushed above the 8MA, which is something that I use. So at this point, as a good trader, as a good day trader, you got to look for reasons to exit. If we start ripping here, I got to be ready to close my position. So I was taking a look at the premium, seeing what the premium was telling me. And Google is a name that market makers rely on the premium more to tell the direction of Google, since if you look at the Google stock chart, it's pretty messy. Algos aren't going to be necessarily trading off of the stock chart, more so how the premiums are reacting before the stock even moves. They're looking at the bid and the ask before the print actually comes out. So on this push, take a look at what premium did. If we zoom in right here, I know it's something very small, but this was a big tell for me. So we got that push to 3.7, and then on that push, technically the put premium should go lower than they were right here. But if you look, and I noticed the exact same thing on the 2490s when I was in there, is it went down, but it was still around 10 or 15 cents higher than my entry, even though we were, a point, 2 points higher than the stock entry. And so that was a huge tell for me. market makers aren't buying this little bounce right here. They're still focused on the downside. So I held my position, even though I was, looking for an exit possibly if we kept bouncing right here. But I held my position, still confident because of what I saw in the premium. And what do you know? What happened? We dump the next couple candles for a nice gain, locked up around here. And then I'm holding some runners, which are doing pretty well. They're near low a day right now. Yeah, so my runners are at, let me open up my Tastyworks. They're around 4.2 right now. They're not showing up on here since it's such low liquidity strike, but they're at 4.2 from 2.6, my entry. So they're doing good, but basically this is what I see when I'm watching premiums. I don't necessarily have them open on a chart right here, but I do watch them on the side. When I open my Tastyworks, I have the bid and the ask, and I'll be watching the bid and the ask and see how it moves when the stock moves. I'll be watching the options to see how they move while the stock moves. And this was a great example of market makers spiking the put premiums even though the stock was actually going up. And there was a big tell for a move down, which is what we got. Alright, that's it for you guys. Bit longer than I expected. Sorry, I wanted to make this really quick for you. Hope you guys have a great day. I'm going to kill the rest of the day. Hope you guys kill the rest of the day too. Talk to you later.